Hey all, so welcome back to another episode. So in this video we are going to understand about the options open interest, and also we will try to understand in the end of this video how we can find out the critical levels of a particular instrument, and also how the reading of open interest is going to assist us in our options trading. So first let's try to understand what exactly the theoretical definition of open interest means. So now open interest are total number of outstanding contracts which are not been settled yet in an expiry. Open interests are those number of contracts which aren't been settled in an expiry yet. Okay, so which means what? Now let's say if I want to buy a contract and you want to sell a contract. So I bought a contract, you sold a contract, that creates one open interest. Now buyer and seller opening an options contract is open interest, as simple as that. Open interest, the name itself suggests the meaning of it, the total number of open contracts in which the participants have put interest in. So again the same example, I am an option buyer. Let's say I am buying 15,900 call and you are selling 15,900 call. So we meet and we create a contract that is called as an open interest. Open interest is always quantified in multiple of lot size of the particular script. Now let's say if I bought one contract, you sold that contract, okay, of Nifty, and let's say if Nifty's lot size is 50, okay. So in that scenario, that open interest would be quantified as 50 contracts, 50 shares of Nifty for that particular strike prices. So for each and every buyer there has to be seller standing, and at the same way for each and every buyer there has to be seller standing. Now how does that make sense? Now if I tell you, if we want to go ahead and buy Nifty's 15,900 call option, right? So now let's take an example. If we want to go ahead and buy a particular contract, okay, now there should be also a seller standing in front of us who is ready to sell that contract. Only then an open position will get created, right? Elsewhere, if we just click on the buying button on our terminal, it can't be the case wherein just order goes in the terminal and stays in the system forever, right? Options is a no level playing field wherein if there is a buyer, there has to be seller standing in front of that. Only then actually the order will get initiated, and then actually the open interest will get initiated, the open interest will get created, the open contract will get created. So as simple as that. Let's say if we want to go ahead and buy a particular contract but we don't get any seller who is ready to sell that contract, then our order will not get even executed, right? So now let's try to sum it up very quickly. Open interest is what? Open interest is the open contract in which the participants have put interest in, wherein it involves buyers and sellers both. For each and every buyer there has to be seller standing in front of that. Only then the open contract will get created. Open interest is majority of the times quantified in terms of lot size of the script. Now how does this help us in our trading pattern? That is the most important question. So now analysts, whenever they look at the open interest data, they look at it from a seller's perspective. So now the first scenario is that option buying requires limited capital. Anybody with a very small amount of capital can go ahead and buy that option. But as we all know, option seller require a much more higher margin. So selling requires a much more higher margin. That was the first point, which was the margin in case of buying is very less, margin in case of selling is very high. Second scenario is basically option buying has limited losses, whereas option selling has unlimited losses. And the third scenario is option selling has limited profit, whereas option buying has unlimited profit. Now anybody with a very limited amount of capital and any decent kind of risk appetite can be an option buyer. We can go ahead and directly buy an option. Our maximum loss is going to be the premium which we pay, right? So ultimately we have not a lot to lose, but in case of option selling, there is a lot which an option seller can lose because the risk is unlimited, the margin is very high, and also the profit is limited to the premium which we receive. So if we look at it, the option seller stake in terms of open interest is very high as compared to option buyers. So that is the reason technical analyst will always look at the open interest from an seller's perspective, from a writer's perspective rather than a buyer's perspective. Although it will be that buyers and sellers would be in equal number, only then the open interest will get created, right? It can't be the case that 100 contracts somebody has bought, 50 contracts somebody has sold, and open interest gets created to a certain number, right? The buyers and sellers would be equal, and only then those open contracts are getting created. But analysts, due to seller's stake is high, they look at the open interest, the options open interest from an seller's perspective. So now, although they involve buyers and sellers both, but technical analysts assume while looking at the open interest, while reading the data, that they are the option sellers and they look at it from a seller's perspective. But although it involves buyers as well. Now, let's try to understand how we can equip this thing in the options trading and how it is going to help us. So now I am in open interest tool on our web application, wherein the green color candles or green color bars are showing us the call open interest, whereas the red color bars are showing us the put open interest. Now, if we look at it from a seller's perspective, the open interest, although it will have buyers as well, but if we assume from a seller's perspective due to the factors which we discussed, then 16,200 call option has witnessed heaviest call writing, which indicates that market is expecting that in this expiry, which is 22nd of July 2021, Nifty might not be able to cross 16,200 level, because that's where the highest call writers have been betted. Now when we sell a call, when we expect the market to remain below at least our strike price, so that our option turns in out of the money, right? So in this case, 16,200 call option is the strike price where the maximum call writers have placed their bets that it might not be able to surpass 16,200 in this particular expiry. Further, you can also find out the support as well. So 16,200 was our resistance. So the biggest red bar on the entire graph will act like our support. So red color bars are showing us the put open interest. Now wherever the highest put open interest is placed on the entire option chain, that strike ideally acts like a support. Now why is that so? Because maximum put writers have betted on that strike that in this particular expiry, Nifty or the selected instrument can't go below this strike. So talking about 15,800 put option, the total open interest is 25,81,000, and in today's date 17,10,000 open interest has added in today's day. So this acts like our major support, which is 15,800, and the highest green, the highest call over strike, acts like our resistance, which is 16,200. So now if we see a particular instrument wherein a lot of call writers are unwinding their position, so this hollow is indicating us that call writers have unwinded their position, whereas the tip which has brightened, it is showing us additions have been made. So wherein in this scenario I have opened Tech Mahindra, wherein if we see a lot of call unwindings going and a lot of additions in puts going on, which indicates that put writers are betting aggressively but the call writers are unwinding, indicating that resistance is getting weaker and weaker, but the support on that instrument is getting stronger and stronger. Now talking about the impact of the same data, wherein we saw that Tech Mahindra, a lot of call unwindings are going around and a lot of puts are getting added, indicating a strong support and weakened resistance. So Tech Mahindra has today gone up by 3.02%, wherein in futures OI it has gone up by 4.0%. The open interest in futures has gone up by 4%. So I would say that was it from this video. So if you have liked the video, do hit the like button, do hit the bell icon, so whenever we post something new, you will receive a notification. Thank you.